Alright guys, so this coronavirus has me looking a little rough, so I'm gonna leave this hoodie up for the entirety of this video and probably for the next couple of videos. So just bear with me. I'm gonna get a haircut eventually. Y'all just don't need to see this. It's not becoming. Y'all need to see this like this, man. I'm looking a little rough, but I got a good video for y'all today. Stay tuned. I'm gonna teach y'all how to invest your money in the stock market. So stay tuned. Bless Squad, what's going on with y'all, man? It's your boy Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And today we're here to talk about what should I invest in. A lot of people ask me that question when learning about the stock market, and I'm introducing them to the stock market. They're like, what should I invest in? What should I buy? So what I'm doing is breaking down this video to explain what you should do. For me, it's hard to explain to people exactly what they should do because there's a lot of different scenarios and situations that can come up with you personally, because I don't know you personally and what your risk is and what you want to do and what your goals are. So investing is something that needs to be catered to your style and your lifestyle. So what I did here is break it down into 4 different categories. I have 4 people here, 4 different scenarios of people, and hopefully you fall into one of these 4 categories and you can understand and see, okay, I fit person A, I fit person B, or maybe I'm somewhere in between and can do both. So hopefully these people here, what I'm explaining for you here, will allow you to understand what you should invest in. And I answer the question, where should I get started in the stock market? So let's get into it. I have my notes here because it's a lot to cover. So the first person we're going to talk about is the passive guy. So the passive guy is somebody that already has a job. They already have a 9 to 5. They're working hard. They like the job they're working at. They really don't have time to learn how to invest in the stock market. They just want to put some money in. They have maybe like $1,000, $10,000, $50,000, whatever. They have money and they want to invest it. They want to put money in. So for this person that really doesn't have time, but they have money, I will recommend these things here: 401k, IRAs, Roth IRAs, mutual funds, index funds, or hedge funds. So with the 401k, this is something you could get from your job. So if you are working a 9 to 5, your job should supply you with a 401k plan. They're going to match what you put in. So if you put in $1,000 every quarter or something like that, the job is also going to match $1,000. So you have $2,000 going in every quarter into the market. That's a great opportunity. It's a retirement fund. So once you retire at around age 65, 67, what they do, they pull this money out and now you can now spend this money that you've been saving up and investing. So it's a good strategy for somebody that is looking on the long-term picture, that wants to invest their money over the long term. For these things, they usually give you like a 10-ish to 12-ish% return on your money. So if you have $1,000 in there, they're going to give you an extra $100 per year on average. This is the average. So sometimes you're going to have your really good years where you get 20, 30%. For example, last year, it was like a 20, 30% return on your money. But right now, currently, of course, we're having a down market. So those returns are kind of white. But on average, they usually give you like a 10 to 12% return on your money, which is pretty good, especially if you have a lot of money in there. Let's say $1 million, for example. That's $100,000 every year on $1 million for it. So that's pretty cool opportunity. You really don't have to do anything. You just put money in, and then by the time you retire, you're able to get some type of return on your money. Pretty cool. The next one is the IRA, the Roth IRA accounts. And this is something I personally have. I personally have the Roth IRA, and I really like the Roth IRA. It's kind of similar to the 401k, except it's not with your employers and the taxes are a little bit different. So for the fund I have for the Roth IRA, there are no taxes on what I have to put in. And when I take it out, I don't have to pay any taxes. Same situation. I could take it out when I retired. It has a 59 and a half. At 59 and a half, that's when you can pull it out. And it's completely tax-free money. So that's the benefit with that for me versus the 401k versus the Roth IRA. But with the 401k, of course, it's through your job. So if you want to do it this way and get both, get the 401k plan, have your company match it, maybe they have some other perks on the side that they give you for getting the 401k, as well as have the IRA in place where you're putting an extra $500, $1,000 in every week or every month, every quarter, whatever, where that's racking up tax-free. So that's just like a win-win scenario. So you're building up two accounts, and you have quote-unquote two savings accounts, so to speak, that are going to last you into retirement that you can pull from a retirement standpoint. The next ones here, you have your mutual funds, and then you have your index funds. So the mutual fund and the index fund are very similar. With the 401k and the IRA, they're actually buying mutual funds and index funds. So when you go into the market, they're buying a basket of stocks. So let's say your Apples, your Googles, your Facebooks. The 401k is buying these basket of stocks, and that's where you're getting your returns from these mutual funds and these index funds. So you can also buy them individually. So you can, instead of getting an IRA or getting a 401k, you can just straight up and buy these things on your own. You can set up your own little brokerage account. I'm quite sure you maybe heard of Vanguard index funds. They have the Legg Masons. You can sign up with Fidelity or TD Ameritrade, and they can set you up with some index funds or some mutual funds that you can purchase. So the difference between the mutual fund and the index fund. So the mutual fund is a basket of stocks, just a basket of companies that you can get. The thing with the mutual fund, you have somebody managing it with all of these things. You have somebody managing these accounts. So they're going to charge fees for what you're doing, what they're buying, and what they're selling in the account. So if somebody's making 20 trades in your account throughout the year, you have to pay for all those trades. So if you make $1,000 that year and each trade costs you $5, they're going to take 5 times 20, what is that, $100 out of that. And that's what you're going to end up on the year with this stuff. So you have to, when you're looking at a lot of these things, you have to figure out how much they're charging you fee-wise for these mutual funds, how much are you expected to return, and how much am I going to actually realistically get on these things. So if you're making 10 to 12%, you might walk away with like 7% when fees are factored in. So that's something to look into. When you're looking into mutual funds, just make sure you check the fees, check what's going on, and really get an understanding of what realistically I can make. So it's something you definitely have to do your research on. I can't individually talk about each little mutual fund because every mutual fund has like its own little style and what they're doing and investing criteria and stuff like that. So that's something you do have to research when you're getting into the mutual funds. The index funds are slightly different though. The index funds don't have managers, so their fees, they don't have as many fees. They may have like a one-time flat fee just for purchasing it. So it's a lot simpler, and it's not so many excessive fees that can bring the returns in your account down. So for me, I recommend index funds over mutual funds based on the fees. So with that, sometimes you can get better returns on the mutual funds because you actually have somebody managing it. But with the index fund, it's just tracking one market. So let's say you want to buy an index fund of the whole market. So it's just gonna, as the market goes up, it's gonna go up. As the market goes down, it's gonna go down. So nobody's really managing it. It's just it's following one sector or one group or one company, one stock type of company, and it's just gonna fluctuate as that fluctuates. So that's the downside with index funds, but the returns can be better based on the fees versus the returns. So mutual funds figure out how much the fees are, how much returns you can get, versus a mutual fund where it's going to give you simple returns but no fees. So that's the balance between the mutual fund and the index fund. Next, right here is the hedge fund. I don't think a lot of people can get into this. This is something that's really locked out for like the ultra rich that really have a lot of money to bring into these things. So hedge funds is something you can look into if you're like a super net worth type of individual. but the average Joe will not be able to get into these hedge funds. They usually get way better returns than everything that I just talked about. So if you can get a hedge fund, call me, because I'm trying to get in too. So yeah, so we can all make a little bit of money. But on average, for all these things, for the passive guy, you're going to get maybe about 10 to 12% on average for your money. If you're taking the fees, maybe a little bit less than that. So for the passive guy, that's what I recommend for y'all. Look into the 401k, look into the IRA, look into the mutual funds, the index funds, and potentially a hedge fund if you are bringing in a lot of capital that you want to invest in. So next is the one that I like a lot more, because you're actually understanding the market, you're actually figuring out what you want to do with your money, and you actually have control in a certain stance. Instead of having a manager do it and you're basically paying him to invest your money, you're doing it on your own. And for this is the person that has a little bit of time in their hands. They have time to look at the market every now and then. They have time to learn how investing works. They have time to understand how businesses work. But maybe they're still working a 9 to 5 and they don't have time to look at the market every single day. They just want something long term that they're going to hold for maybe 18 months or a year or 5 years or 10 years or whatever. For them, I would recommend long-term investing. And with long-term investing, you're going to do a lot of what is called fundamental analysis. I went over this a little bit in my first video on what is the stock market. So fundamental investing is when you are looking at the inside of the company. You're looking at what is called a balance sheet. You're looking at how much cash is coming into the company. You're looking at what products they're buying. You're looking at what their price to earnings ratio is. You're looking at a lot of different numbers to make sure this company is running smoothly. They're actually turning in a profit every quarter or every month, and seeing if they can last for a long time, and actually can you make some money on this company. So that's what you're doing from a long-term standpoint, looking at good companies, looking to buy good companies that are going to stay around for a long period of time and make you decent returns. It is a cool strategy. I dabble in it a little bit. My mentors do it a lot more than I do. For me, I don't have the patience to sit around for 18 months, 2 years, 5 years, 10 years to get like serious returns. You can do very well in that space. I dabble in it, but it's just a very slower process. But it definitely can work if you do have a lot of patience and you want to slowly study the markets. It definitely works out. It's really cool. The next one is for the person that is a little bit more active. They have a little bit more time on their hands. They really want to understand what's going on, and they don't want to wait a couple years to, see crazy returns on their investments. Because the long term takes time. It takes time. It's a patience game. It's a waiting game. It's understanding, okay, this is going to take 6 months, a year, 2 years, 5 years, 10 years. For people that don't have that time, you can do what is called swing trading. This is for somebody, you can still have a job when you're doing this, but you will have to be a part of the markets probably once a week or so. Just look at your account on Monday, pick some stocks that you want to buy, and then by Friday you can look at it again and see, okay, I made some decent returns on it. So it's kind of passively working for you throughout the week. You understand, okay, this is moving up. I want to buy this on Monday and sell it on Tuesday. I want to buy this on Tuesday, sell it next week. It's just something that's slowly racking up, slowly accumulating. And this is something I personally started with, swing trading. It's really cool. I highly recommend it for people that want to learn the markets. I think it's the best way to learn the market because it's slow. It's slow enough that you can learn, but fast enough that you actually see what you're doing and understand, okay, I'm making money in the market, I'm doing this, I'm learning that, I know what this does and that does and that does. It's a really cool opportunity for you to learn the markets at a decent speed. With that, you're going to deal with a little bit of fundamental analysis, which is looking at the inside of the business, and you're going to look at also the technicals, the technical prodigy. You're going to look at the technical analysis. So I may do a video covering specifically technical analysis altogether. Each one in a separate video, so stay tuned for that. But technical analysis is when you're looking at the prices. You're looking at how this stock is trading over a 2-week period, 4-week period. So if you have a company that's here, that's bouncing, stock price keeps bouncing like that, you have your $100 level, let's say this is $100, and then you have this bottom level that says 50. So if you know it's bouncing like that and it keeps on bouncing 50, 100, 50, 100, you know a good place to buy it would be 50 bucks. So you buy it at 50, and then you swing trade it. You hold it for a couple of days, couple of weeks, until it reaches the peak where it peaks out at 100, and then you sell. So that's basically how swing trading works. It's not too complicated. Once you take a look at it, it's just identifying the technical levels where this thing has shown patterns where it wants to bounce the lows and then your highs. And this is something I'm going to break down a little bit more in another video. I might put a link up here for y'all to explain that a little bit more. And then the next one, this is for the guy that just wants to make this a everyday thing like me. You know, every day you want to get in the market. Every day you want to buy something. You want to buy and sell something. You like quick, fast money. You like speed. You like adrenaline rushes. You just like the market to be there quickly and, you know, make a quick buck every day. So for these people, I would recommend day trading. This is something I do every single day in the morning. It gets really, really hot. So think of swing trading, but way faster, because the time frames where you're looking and identifying these good places to buy and good places to sell are in a 5-minute period, a 10-minute period, a 20-minute period. So you're identifying these levels at a very quick pace. And this is something that is really cool because you can do it for like an hour, 2 hours a day, and then be done for the rest of your day. So that is what I recommend for somebody that has a lot of time. With these things, as you're progressing, the more you're in the market, the more you have to learn and understand. So it comes down to a point where how much time do you have on your hands? This is what you need to ask yourself. How much time do I have on my hands to learn the market? Do I have 0 time on my hand? I just need to passively put it into an IRA and let somebody else do it. Do I have a lot of time on my hand where I can be a day trader and be on here every day for an hour, 2 hours a day and really study the markets? It's really up to you, and it's also up to what type of returns you want to get, because in these IRAs you're only getting like 10-15% a year. But in a day trading scenario, you can make that in a day. You can make 10% in a day. You can double, triple, quadruple your account in a month. So the opportunity is there with day trading, swing trading, and investing. So when you have your own money and you're actually investing it on your own and learning how to do it on your own, the returns can be exponential. So for y'all, I recommend that you truly learn this skill, learn this craft, and learn how to actually invest in the stock market and understand what the stock market is about. Putting your money with other people is cool. I mean, it's cool. I do it. I have my own account with other people, but I also have my account with myself where I know I can make bigger and better returns. This is just long-term 401ks. This stuff can be short-term. This is to really build wealth. And build a true second source of income. So if y'all have any questions down below, hopefully I broke that down for y'all. Kind of the time frames for each thing, how much time you need to commit to each thing. No time with the 401ks, a lot of time with the day trading. And also it's up to your risk tolerance as well. I definitely would look into each one of these type of subjects to see which one interests you. If you have any questions, leave them down in the comments down below, and let me know, what are you investing in? Are you doing the mess out of my shoulder, man? The mess out of my funny bone. God. All right. Anyway, so make sure you let me know in the comments, what are you investing in? Do you day trade? Do you swing trade? Are you a long-term investor? Do you have 5 accounts? Do you have 4 401k plans and IRAs all over the place? What do you invest in? And if you have any questions, let me know down in the comments. It's been your boy, Blessed Applesauce. Stay blessed, and I'll see you next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.